Good morning. We are doing pre-London Open analysis, Wednesday, 7th of September. So let's have a look at the news and what has happened yesterday after the data release and what we have coming today. Now, the data release yesterday, the orange folder, the little spike that we had was negative for USD, but then we can see that, you know, the actual PMI data came out positive, and that positivity, you know, ran euro in a downwards direction. So we definitely are seeing strength in USD and weakness in euro. And, you know, it's evident what is going on today. We have GBP news coming out. I mean, this is going to be a big one. We just acquired a new prime minister, and also now, you know, they are releasing data, you know, on GBP as well. So I think it's going to have impact on the markets, on euro as well, because I think it is going to determine, obviously, the strength between euro and GBP, and obviously GBP and USD, and then that will impact our pair. So that's something we need to obviously pay attention to. And then we've got CAD news at 3. I mean, CAD news sometimes can impact the markets overall, so just something to pay attention to. But I would be more worried about this GBP news release rather than anything else. Now, let's take a look at what is going on here. Now, looking at everything from daily perspective and weekly perspective. So, you know, even from monthly perspective, the price is down, sellers are in charge. In terms of weekly perspective, sellers are in charge. And this week, even to be fair, on this close, we did not close yet with a body. This is where this week we are potentially going to close with the body of the candle, and we know that body candles are more kind of guaranteed when it comes to higher time frames. When we are looking at the daily, we already had a body close below the swing low, which was a weak low. Then we had a corrective market, then price went to the downside. Then we had a corrective market again, and it corrected this leg. It didn't correct the whole move. It only corrected this internal leg. And then we now can see that price is continuing trickling to the downside. So we are waiting for that kind of full momentum to pick itself up. Now, we also see, of course, the break of this overall low. Now, the break on 4H, which is actually funny because usually we have an overlap, but on daily, that swing low has been broken by daily with body close, whereas on 4H it has not been. However, every time I see price trading below a certain level, and that is a first indication that if we are trading above certain highs or lows, that potentially that high or low may be taken out, especially if it's in the direction of the overall bias. Then we had that pullback yesterday into our supply, which also, you know, is showing us that the price is in an efficient order flow. We do not have these drops yet, you know, but I think potentially the price is kind of preparing itself for that kind of bigger of a drop. We do have, you know, imbalances up here, up here, up here. If we look at it from the perspective, zoomed out perspective, I mean, we have so much void here, but because it's a higher time frame, it will take time for that price to eventually correct that void, and that could be years, because if you look at the void, for example, that existed here for a period of time, that was in 2020, and eventually it started being addressed in 2022. So it's not something we can expect to happen. We just have to, in terms of higher time frame, go with the direction of the sellers and buyers. Now, going back into our drawings and what we have here. So, of course, we can see, you know, a few things that happened. Now, one thing that I'm changing a little bit is for the internal legs, I'll be using my fib retracement, because after yesterday and misreading higher time frame with lower time frame and not combining the knowledge together, I was very fixed on inefficient order flow on lower time frame, and I really wanted that refinement to be hit. And because that refinement wasn't hit, I did not change my bias, but all I needed to see was that the higher time frame has hit the premium or discount, and that is going to help me to see what is going on. So I am using this as normal, and then my GAN box, which is essentially the same function, I have made it like that. So then when I am going to draw it between the main legs, like for example, we have here, we have the high and we have the low, I'm just going to have it on my charts and it is see-through. So all I have to pay attention to is for the price to come back into my red line or whatever color you are going to make it. And then, for instance, if the price came back into the overall leg, because remember, you know, when we are looking at this price action here, we could say that this is one leg, this is a pullback, this is now another leg in the making. But obviously, in between that main leg and swing high and swing low and swing high and swing low, we are going to have internal structure that we are going to monitor on this whole leg. So this is going to help me to monitor those overall legs and kind of to see what is going on. Like for instance, I can see that on the overall leg from this high to actually the low was created here at the time. We did not come back into on the overall legs premium. However, we came back on to the premium on this leg here. So internally, now I know that this leg is running in an efficient way. So therefore, because then we have another leg from this high here to this low, then I can be like, well, this already has been mitigated, this leg, internal leg of this overall leg. Therefore, when the price will start eventually returning, I am more kind of looking here for reactions rather than price turning around, for example. And here is where I'm looking for more price actually, you know, tapping into those orders and potentially turning around and then going bearish, etc. So I've got that distinction now. And that's not to say I'm only going to use it on the swing. I may use it on the swing. Like, for instance, I give you an example, what we could do now internally here. So I can move this a bit to the right. This is just for my information, what is going on in terms of bigger picture. Now, I could also use that here and I could say, well, this is now my, this is actually the highest point. This is the high. Hold on. This is the high. This is the low. And at the time yesterday, this was the low. All right. So this was the low yesterday. And this is what the price did. It came back precisely to the premium of this overall leg. But I was focusing on the internal legs. And then I was focusing on 15 minutes legs. And I missed the fact that we are hitting the overall legs premium as well as 4H premium of this leg from the high to the low. So we had an overlap of this premium and this premium. And even though we did not mitigate precisely my 15-minute leg, that was strong enough of a reason to change the bias to sell bias. Okay, so I want to keep certain information on my charts. And because this is just see-through, it's not really affecting my vision. And all I am going to look at is, you know, what the price is doing. So now I know that this high and this low, we have actually mitigated this move. And then now I can kind of, for example, now, for instance, what I can also do is I can put this on this internal leg because this is the high that we created yesterday after tapping into that premium. This is the low. Yes, on 4H, we did not close below, but, you know, I can see that it is a leg, and on 15 minutes, it is going to be the overall leg. And then as I have the overall leg, and I know what I'm waiting for in terms of my premium, now I can also measure the internal moves to fully understand where we have price coming back into or not coming back into our premium and discounted area, and which areas are not yet mitigated. So if you want to apply that as well, please do. If you don't, that's absolutely fine. Whatever is easier for you. Now, I want to return back to daily. So we can see that we, you know, broke the structure here to the downside on daily. So that is done, so break of structure down. And now we can see that we are potentially preparing to take this low out. Now we haven't yet on 4H, nor have we done it on daily yet. So this is kind of on 15 minutes, a break of structure down. So you can highlight to yourself, not a chalk, break of structure down. And you can also highlight to yourself that this is on 15 minutes rather than it is higher time frame, where here you can highlight to yourself that this break of structure is daily as well as 4H, and you have, you know, a clear distinction of what is going on. Now, this is what we are doing here, right? So first of all, previous week's high and low, I've deleted accidentally previous week's lowest price. So previous week's lowest price is here. And again, we started the week by trading below the lowest price of last week. We started our you know, trading week here, and then we went to the upside, and then now we are back trading below previous week's lowest price. So that is kind of also telling that the price is already trading below the week's low. You know, what is the reason for that? Well, we will see, we will find out. We've got a lot of data coming out. Another thing that I want to highlight to myself, of course, as always, which is daily high. So daily high of yesterday, and that kind of also aligns with our that internal leg that we are looking at on 4H and 15 minutes. And then also we can see that we have the lowest price of yesterday. Now, when the price is heading for the daily high or low, I am expecting it to be swept, you know, and that is the same with Asia session, London session. That's why I highlight it. So here as well, we have kind of multiple confluences that this likely is going to be swept, because we've got London highs, we've got previous days highs, and obviously we are going to whittle it down on lower time frame as well to see that this could be swept. Now, this can help us with getting into the trade, with getting out of the trades, and with our targets, because if we have a prediction where the price is likely to head to, then obviously that is going to help us with decision making. Now we have daily open. So at the moment we opened the price here last night during the Asia session, and this is the daily open. At the moment we are trading below. I'm just going to move this to the downside so we can see to the right what is going on in terms of our lines. This line though, what is this line? Okay, this is this, so that is fine. So now we've got the daily open and we are trading below. Now 4H, I briefly have done 4H, but we can see that, you know, all of the price action here is efficiently mitigated in terms of 4H perspective. Everything is mitigated. We had a push to the downside, we broke internal structures and price came back, mitigated to premium, hit the supply, then the price broke the structure again to the downside, price came back, mitigated the supply, came back to the premium. Now the price is pushing to the downside, did not close, but is traded below. Could it be that the price is not going to continue down? We don't know. We are going to monitor. However, the points that I'm making, that all of this is already mitigated. Okay, so all of this now to me is liquidity from 4H perspective. Of course, on lower time frames, we may see some reactions. There may still be some areas that may require mitigation. But if for some reason now we closed above this high, I am not expecting for any of those supplies to hold, because not only do I have liquidity here, we also have liquidity here. So this is where price potentially might be heading for the premium of this leg, our overall leg, which would make absolute sense, because the price, remember what the price likes doing is price likes to liquidate and make orders, induce and actually move. So from the higher time frame perspective, this could be what could be happening, because we will have here that move and liquidity, inducement and actual move to the downside. Now, I'm not saying that will happen, because the price may continue, but we just have to observe this high. And if this high is going to be taken out, that we have liquidity stacked up here, we have now liquidity stacked up here, everything's mitigated. Therefore, the price may have a reason to do that, may not. We will be observing. Now, of course, on 15 minutes, there still might be areas that are unmitigated, but this is where we have to establish the kind of entry criteria you would go with, because now it is, if you are going with the direction of the market, so we already do monthly down, weekly down, daily down, 4H down, 15 minutes down, then on 1 minute, just sell, sell. You don't need extra confirmations. However, if we have monthly down, weekly down, daily down, 4H down, but 15 minutes is starting to trend up, and then we want to join that trend, which we did yesterday. We had everything down, all of those 4 time frames. We only had 15 minutes going up. Then when the price is returning into our areas that we could potentially buy from, we need to wait for 1 or at least 2 confirmations and not buy straight off the level, because that doesn't make sense, because you are trading against the force of higher time frame. So this is where chalk is the minimum, double confirmation is perfect. It depends how you want to approach it. But then if we see that, like it did on 15 minutes, and it actually took the internal swing low out that was responsible for the order flow to the upside, then you've got all of these time frames on your side, also 15 minutes and also 1 minute. So then just sell. Then you can just sell straight off the levels, and you don't need to wait for any extra confirmations. So I hope that clarifies how we should adapt our entry models, and when to go aggressive and when not to go aggressive. But of course, I will refine it all. I've opened the channel for it. It's all going to go into a PDF, and it's all going to go into a video as well. So all of that is to bear in mind, but I obviously want you to have that information. Now, let's break it down on 15 minutes and understand what is actually going on. So I want to break it down from those London highs. So this is where we had a break of structure to the upside. And this is where we had our swing low. So let me just go here. We had our swing low that did create this internal swing high, and it was efficiently running. We had inefficient order flow here. So actually it was from about this low there. We had inefficient order flow breaking this high, and price started pulling back, but it never pulled back into the discounted area, continued moving up. And in order for the price to become efficient again, he has to come back into the discounted area, break the high again, and then we have a confirmation that the order flow is re-established, and then we can continue buying. Of course, we can do that if we do not tap into a supply, but we tapped into a supply in the premium. Therefore, our buys could still be valid, because we could have just been experiencing reaction here, and the price could have been heading for the higher supply over there in a premium. But this is where you need to be more passive and say, well, I need at least change of character, or I need at least price to come back into my demand, give me a change of character on 1 minute, then I'm just going to wait for the order flow start building on 1 minute, and then I'm going to join to the upside. We know how to trade the order flow, so there is not rush to get straight off the level. So that is one of the things. However, when you see that the price created that swing low here, reestablished the order flow, and then it had been taken out, and now your order flow is running to the downside. And I got a question yesterday saying, well, how do you know after this low is going to be taken out, the price has not been mitigated yet? How do you create trading ideas from it? Well, I'm running on the assumption that we have hit the premium, that we took out the swing low, and now we created the first leg. So the price has to come back into the premium to continue to move to the downside. So of course, I have no guarantees, but in theory, that is what the price should do. And I'm joining that order flow to the downside, because by taking the order flow out to the upside, then it is showing us that the order flow to the downside may be in action. Of course, again, we don't know. Sometimes, not usually, sometimes when the order flow is re-established for the first time and it's not yet like fully in action like it was here, this is where price may want to come back to the extreme rather than 50%, because the order flow from 15 minutes perspective is not yet fully flowing, because remember, to reestablish any new trend, you need to set of new highs, two set of new highs and new lows. Okay, so this is where you could wait for the price to come back into extreme. And again, on this, it could be more passive and say, well, I want to chalk, and then after the chalk, I may get in. I'm not going to get straight off the level, etc., etc. So then we had the change of that leg. So what we can see is that, you know, now this is our swing high, this is our new low, the old low has been taken out, and we had re-established the order flow from this point. Of course, beforehand we had breaks of structure, which also count, but here we are just highlighting that this is where the actual order flow on 15 minutes has changed. Now this is the one leg that took out this order flow, and then this is where we have our this premium area, and we are looking, of course, for the price to hit that 50% mark. Now we didn't. It actually was very close. So it hit a supply that was part of the premium, but it did not actually hit an area. Therefore, I personally would still be thinking that we do have orders here. This is not really an efficient order flow. So here orders are potentially still open. And now this is also near previous day's high, near London highs. Here, we also did not quite hit that internally on 15 minutes, did not quite hit premium. We hit the order block that is sitting on that premium. So then again, we definitely have orders open all the way up here. But now on this leg, this is what we are seeing. So this is all 1 minute that I've highlighted. I don't know if it still stands. We will have to reestablish that. So I'm going to just put that to the downside, to the left at the moment. Then the price broke internally the lows again. Okay. And then this is the leg that it finished. So we had again high and low, and then again we can see that the price here has this supply that is unmitigated and left with orders. However, because this now is liquidity, because that is also inefficient, I would prefer if the price came back here rather than here. So this is, again, this is where I'm establishing the strength of the point of interest, and this is where I would say here I need minimum chalk in refined 1 minute area plus break of structure. This is my rule for that. Whereas, for example, here, I would say potential sweep of the previous day's high and London high plus change of character, and then that would be enough. If I got a sweep and the change of character, I would go in. But remember, before a sweep, I'm just going to add that note: before sweep, price will create inducement. Well, it is likely to, it doesn't have to. But what the price will do, it may arrive here, tap, create nice, you know, potential something, but this is just going to be liquidity. Then price is going to sweep that, and this is where the real order flow will start moving to the downside. So those are my plans in terms of here. Right, let's continue moving down. Now, here we did not pull back again. Again, I'm going to move these 1 minute. I'm going to just move it to the left. This, never mind. This, I'm going to keep for now. And now we did not pull back into the premium. We broke the internal structure again. Okay. Now, to be fair, do you want to take into consideration this little break? You can do. Because what we can see here is that, you know, we mitigated it, therefore, then price dropped to the downside. But really, you could take into consideration, well, this pullback and this low, because this is where the price started, you know, really dropping. The small little pullback just means that this area here on 1 minute is mitigated. As we can see, it mitigated it. Therefore, there are no longer any orders there. There might be some orders at this wick there, and then price moved to the downside, came back into the premium, tapped the order flow, so it's protecting those highs at the moment, and then it started moving to the downside. I'm going to delete all of this because I don't know what is that at the moment. So now this is our swing low, and if the price is going to start running from here, we are expecting for the price to continue to move to the downside. Okay, now price tapped into a supply. That supply is mitigated now. So if this is going to hold, it has to hold. If the price will not hold it, this is stacked with liquidity. And then we can see that this was inefficient order flow. Therefore, price could come back here. This was also inefficient order flow. Price could come back here. However, this was inefficient order flow, but it is a first area as well in our premium. So this is where we will observe what the price is doing. Is it start building that order flow on 1 minute? Because now here we are working internally. If the price will start building the order flow on 1 minute, we can just join, but we won't be surprised. Oh, why is this happening here? Why is this happening there? Because the price may want to pull back all the way up here, may not. And it can do anything it wants. It's within its own right what the price will want to do. So we just can kind of make plans and see what is going to happen. So at the moment, this is my week low, and this is my protected high. So really my high would be here that I'm looking, because this would be a new high when we create a new low. At the moment, that hasn't happened. So this is my protected high, and this is my week low. So at the moment, I'm expecting for the low to be taken out. So let's understand the price a little bit better. So from here, the price moved to the upside. So this was the internal supply that moved the price up. Now we can also see that we broke that. Now we're working with substructure to understand what is going on that internal leg. We broke that, and what was responsible for that break? Well, let's establish now substructure. So we have this to this, and we still have some orders open there potentially. However, this did not really take anything out. So we could kind of look at it from this perspective. So if we look at it from this perspective, because that was the first price trading under this low, internal low, we can see that price did not come back into the premium. So in this premium, we can see that we have all of this area. Now it's very wicky, and it's probably wicky for a reason, to confuse a lot of traders and to induce. So it would be good for us to kind of break it down on 1 minute as well. So I'm going to, at the moment, just take into consideration this whole wick, but then also the price could just react to this wicks here, because this is where the first kind of demand would be. But we can also see that it's equal highs, so potentially there's just liquidity sitting here, and that is going to induce traders. Then the price, so we can see that this is unmitigated, and whenever the price is unmitigated, we are leaving our tool on, so we understand that this yet is not done. And if the price comes back here, let's see what's going on here. It would be beautiful overlap of the 1 minute of this leg and of the overall leg. So this could be quite a nice area. So we will observe this area. Again, could be swept unless they will start protecting those highs, which is absolutely fine. Now, all right. So then also, that was one leg. But then now internally, we have this leg. So all of this here is running efficiently. And that's more of a reason now that I would not be looking to be selling from here, because this is all liquidity. It's just confirming to me that it's all liquidity. Then we could look from this leg to this leg here. And okay, is the price going to come back? We can see that price came back into the wick, into the extreme, picked up more orders. And now what we would be looking for is for the price to take this low out. So actually, what I can do is I can create it like that. So just slightly further to the downside. And this is what the price is doing now. Like at the same time, the price had come back into the wick of this demand, which is previous day's lowest price. I had 1 minute there, I believe. I will look on 1 minute in a second to break it all down. But we are back into that wick. So, you know, is the price trying to tell us something? But that demand is not really that strong to me, because it's a weak low, and also we did not break anything except for its internal structure, and then we did not even break any of those supplies. We just protected it. So I'm not really considering this the strongest area, but I still need to acknowledge it that it's there. So now I would be looking for the price to come back somewhere here. Internally, we are breaking these highs. So internally, again, we're working with substructure. We broke this high with this move here. Now we came back to mitigate. Potentially we will internally now working our way up to this supply, but I think you'll be very clear what is going on after London Open. But now let's kind of break down what we have tapped into in this demand. So what we can see in this demand here, let's see clearly, is that we did take this high out, so therefore that is our leg. Now this high is important. It's just a last supply that pushed internally price to the downside. So this is one leg. Now what can we see? We can see that the price actually came back and mitigated it. Okay, so the price came back, mitigated it. Therefore, this is efficient order flow, and I'm not expecting here. We may see some reactions, but it's not unmitigated. So the orders have been filled, and now we are looking onto the next leg. So the next leg is from this low to this high. Now, because this leg is mitigated, we can delete it, so we don't have to confuse ourselves. So this is now another leg, and what we can see that price did not pull back at all into our area. Now, this is what I would consider, I know that we have an area here, and to be fair, this area here is also, no, it's a weak failed reaction, although we took this lot out on the way down, so it is a failed reaction. So we have this, and this is sitting just at the top of our demand. Now let's see what the price actually reacted to. So we have this, so we are just above it, and this price initially reacted to, but then it went further down on 1 minute, so this can be taken out. Price tapped into this imbalance. As you can see, there was the imbalance there between here and here, and price tapped into that imbalance, and it was enough for the price to grab orders from there. Okay, cool. So that means to me, I can delete this, that everything's here mitigated. If this is going to work, let it work. If it's not going to work, it's not going to work. Now, as we reacted off here, we took on 1 minute internal order flow out. So this was internally the high that mitigated with this, and this regained its efficiency and created the new low. That new low has been taken out here, and then we created a new leg to the upside, you know, starting to build that order flow up. So we have break to the upside. Then the price came back to the extreme, and I told you, when the price changes the order flow around, this is where the price is likely to come back to the extreme at the point of interest rather than equilibrium. Whilst the price is flowing, it's likely to come back to the 50% mark of the premium or discount. So here we had a reaction, and what we can see, what the price did was it created inducement, okay, right above our zone. So this is the zone that we actually tapped into, and here price created equal lows, liquidity pool, and then it gave us a change of character. So those who would be getting in here, just protecting this low, would be taken out. So price created liquidity and had given us a sweep. So we had a sweep of liquidity here as well. And now we can move further up. Now, all right. So then from this point, you know, this is our main high that we are looking for the price to take out as, you know, the overall leg. So this is where the price actually closed. So this is where the break of structure up happened, and the order flow is continuing. But of course, internally, we can also measure what is going on. And we had actually further down here, we had a change of character. And that change of character finished somewhere around here. And this is where price fully mitigated it and then started move into the upside. Then also you could take this whole internal leg, price fully mitigated it, etc. So we have full mitigation of this low. It swept already these lows, so its job is potentially done. And as you can see, price came back to pick up more orders from here and started moving to the upside. All right, now on this move here that we have created, to the downside, back to the discounted area, we have created liquidity. It's equal lows. Therefore, this is where the liquidity is stacked up. Now, this is all mitigated. We can delete that. Now, let's measure the overall leg. So we have the low, and this is where the high happened there. Now, did we come back into our premium? So initially, we had a pullback, and that pullback did not obviously come back into a discounted area. It went to the upside to the supply. Then we received a reaction. Again, we have reacted to a demand that is part of the discounted area, but we did not actually hit the discounted area. So the first area would be here, but we can see that there is a wick that potentially passed on the orders, and that could be the reason. Don't know. Then here on 1 minute, we are looking again for this high to be taken out. So this is like this whole order flow cycle that is going to continue, as well as I still would leave this because this is still open for me on 1 minute at least. So now we are looking for the price to take this high out, and this will create, which it is now. So this is going to be our new low, our new high, and then we could be looking for the price to come back into the discounted area. Now, obviously, remember that price in the morning might be doing this. So what we have established, before I go any further, is that we had internal order flow change on 15 minutes based on price tapping into the area that was unmitigated in this demand. It also created inducement, and it swept liquidity, which is a good thing. That means that this area is becoming quite strong internally and on lower time frames. Now I can delete this. So what we are seeing is that internally we are going up. So where could we go up to on you know, our leg that is, you know, we've got our supplies here. Well, we do have this area here that is sitting at the equilibrium of this overall leg, as well as of this internal leg. So we will have the crossover of premium internally here, here, and here. So now let's go to 1 minute and break it down to understand which could be the precise area that we could be working with. And I think the area that we have is pretty clear. However, one thing that I want to point out though is now we tapped into this high. It was a beautiful tap. It was such a beautiful tap. It was such a beautiful trade. Oh my God. But yes, we tapped into a supply. It was precisely the first supply in the premium at the Wix level. This was inducement, equal highs created just below, and price came back here, picked up orders, and it went. Now here, I know it looks scary when the price is trending like this into your entry, but because we were with the order flow going down, this is where you could have got in. If you waited for the chalk, unfortunately, there wouldn't have been any entries unless you found, because then we had this leg, and then we had our first area, and look where the price came back to. So actually, you could have taken a continuation from here, continuation to the downside. Now, as this continuation happened, again, what can we see? We can see equal highs. Therefore, this is now mitigated. And not only this is mitigated, this kind of is mitigated too, because we did come back into the premium. Yes, we did not tap into the extreme, but we tapped into the first order block in our premium. And then, as you can see, we continued moving the price to the downside. And this is where I think on my market recap, there was a last entry there. And then the price continued kind of slowly moving to the downside. So in all fairness, looking at all of this, this is mitigated. So now, as we highlighted this as liquidity, I would have to be very convinced to sell from here. So in order for me to sell from here, I need to get sweep plus chalk plus break of structure ideally a clear build up of the order flow to the downside. Okay, that's what I would need to see happening here, because now everything's mitigated. Price may come back. Yes, of course, we do have the extreme that also overlaps again with our premium, and that is the first area. But also right above it, we have something else sitting here. So what we have sitting here is an area that the price, do you know when it starts inducing, starts moving, whoop, and then it starts dropping down. This is where we can see on 1 minute that price moved to the downside. It came back to the premium of this leg. It tapped into a demand, so that's why it is deleted, because it's all done. On 15 minutes leg, we didn't have price coming back, but on 1 minute leg, we are fully mitigated here. So I'm going to highlight that we have picked up the orders from here. Okay, so we are fully mitigated there. The order flow on 1 minute was efficient. Then we came back, we tapped, we broke the first structure. So, you know, here that demand that took the highs out, we broke it and we never mitigated. The rest mitigated itself. Therefore, this here is liquidity, and I would sell from here. So this, if I get a build up of the order flow, be my guest. But this is the area that I'm mostly interested in. This could be my targets if I get into buys and strong sells from. Okay, so those are my plans based on what is going on in the markets at the moment. And now I would be looking internally for buys until we hit those supply areas and until we are going to hit the premium back. Does anyone have any questions, anything to add, or would you like me to clarify anything? I think we are in a clear. Exactly the same plans for you. Fantastic. So we are in a clear. We have 10 a.m. news for GBP this morning. We then have news this afternoon for CAD. We had news yesterday for USD, which was positive. Price dropped. Then it, you know, is now correcting itself. Do we have anything for Euro? We do not. We have Euro news tomorrow. We have news all day, every day, all the time. We just have to work around it, and we just have to, you know, judge the situation based on, you know, our plans and what we are doing internally. We are buy buyers. In terms of long-term views, we are sell buyers, but at the moment we can buy until we hit those areas. Thank you so much, guys. Have a great day. Catch you on Discord. Any updates on the charts will be posted on Discord as always. Take care and have a good day. Speak soon.